Hi, good morning. You're watching the market right here on 80 now, and the Nifty continues to elude and evade that all-time high. Just got close to that on opening bell yesterday, but no. From there, we actually fell a good 1% from the day's highs. And it's intriguing as to how within the quiet, lackluster move yesterday as well, Nikunj, the trend rotation or sectoral rotation continues to take place. I mean, yesterday, the move on NBFCs, or for that matter, even on Friday, that's been quite remarkable.
On paper, we were 10 points away from an all-time high. So, frankly, that really is immaterial. What is important here is are the internals here. And that, I guess, is something which is important. Now, whether you add another 10 points and make a new high on the paper, that's purely academic. That does not change the trajectory of the market. I mean, if you would have added another 10 points more, yes, it would have been a new high on the paper and we would have celebrated across media channels and dealing rooms, but that's really theory. What is important here are the internals. And that's where I think the market, I think for me, is clearly indicating that it really wants to go higher. While one thing I've learned over the years is that if the market is in a momentum groove, it will remain in a momentum groove. While you can argue about the pace of the rally, the one-way move, the flows have been unprecedented, but there is no evidence which seems to be indicating that the market wants to retreat or flows they really want to turn very sharply. While we are talking about a linear move in the market, bear in mind that there is a lot of frustration in the market. Folks who have not participated, naysayers were waiting for the market to come down. And before we talk about what should be the strategy of the day, I may just want to remind everybody a famous quote from Sir John Templeton, which is that more money is actually lost when you're waiting for the correction rather than the actual correction occurs. And I guess that really is the truism in this market, which is that everybody is waiting for the correction. Everybody is hoping that, okay, we will buy, but we will buy on a 5% decline, a 10% nick. We want to buy a favorite mid-cap stock, but we are waiting for the correction. Guess what, guys? The correction is not coming. The market internals are telling you that market wants to go higher. Whether it is the psychology of the market or whether I understand the market purely based on maths and physics. Maths is valuation, which is looking attractive. Psychology is naysayers who will keep on pushing the markets higher, and physics is Newton's law of motion. An external law of motion which is in motion will not stop till the time external force is not applied. So psychology, physics and maths, if I put everything together also, market should go higher.
The only thing in the anatomy, let me add one more subject to that, has been that sell figure from the FIs yesterday and 1,000 odd crore rupees. I don't know how much to read into that. That could well just be an aberration.
It could be an aberration, and if it becomes a trend, which is that you get 4 or 5 days of sell flows, then you would ask yourself that has anything changed. Now let's understand the factors which are driving the flows. Money is coming out of China. That theorem has not changed. Money is moving into mid and small cap stocks, that has not changed. Emerging market funds are getting flows, that theorem has not changed. And constructively, earnings in India, I think, are much better than what is happening in the world. Now, till the time these 4-5 factors do not change, I guess it would be hard to make a case that flows will reverse decisively. See, Aisha, money will always move to a performing market. Money will always move to a market where there is near-term growth. India is the performing market and there is near-term visibility. So why? Why is the question?
Yeah, there's no reason to get out of the market, and that's a 360-degree analysis for you on the markets, right from physics, psychology to what's happening mathematically and anatomically in the market. So that's the 360-degree analysis. But the other space that we've been watching out very closely is what's happening to NBFCs. Of course, for the last couple of days, we got fresh brokerage notes and they were quite positive. But if you look at the YTD moves of the counters, that's pretty much in the price as well, and that's what price is telling you. While the likes of Chola Invest, etc., is up around 55%. If you look at the banking names, they have underperformed quite a bit. In fact, even M&M Financial was up 31%, L&T Financial up 32%, and that compares with the banking heavyweights, which have usually moved anywhere between 5 to 10%. Yes, there could be one-off cases like IDFC First Bank, which have managed to post a 30% move. But other than that, ICICI Bank is up 4%, Kotak Mahindra Bank just flat, HDFC actually down for the year. And Nikunj, valuation-wise too, NBFCs are now trading at what? Bajaj Finance, for instance, 6 times the forward book, HDFC's 4 times private, forward book. So not very cheap, but still not very expensive if you look at the, the averages that we have seen and also the peak that we have seen on valuations for NBFC.
Anisha, NBFC is like an ocean. You got Manappuram Finance, which is in gold finance. You got Bajaj Finance, which is a radar-driven retail NBFC. You've got HDFC Limited, which technically is an NBFC, but it is an HFC. And then you've got Shriram Transport right in the middle. There is an Aditya Birla Finance, which is a play on retail, insurance and mutual funds. So NBFC in general cannot be compared as one linear homogeneous basket. But the trend which I think is at play in NBFCs is the following, which is that interest rates have peaked out and demand is strong. NBFCs borrow from the wholesale market, especially if you are in the lending business. And from the wholesale market, if interest rates are moving higher, and in the first leg of interest rate hike, banks will always benefit because your deposits are priced lower and the credit disbursement is at a high level. Because NBFCs are borrowing from the wholesale market, they always end up borrowing at a higher cost in a rising interest rate environment. But when interest rates they peak out, the cost of borrowing peaks out. But if the underlying demand is strong, and if banks they become slightly risk averse, then NBFCs they tend to gain market share. So what I'm saying is purely what has happened in the past, that when interest rates they peak out, or interest rates they turn benign, and if the demand in the economy is strong, I think NBFCs will do well. And now wholesale dominated NBFCs I think will do well rather than the retail dominated NBFCs. Because the play now, what we saw, let's say in a rising interest rate environment, was with corporate banks. I think wholesale NBFCs now have an edge at least in the near to the in the near term. So I will not be surprised that in the near term, retail focused NBFCs may start underperforming. Wholesale based NBFCs may actually start outperforming for some while. So that trend I think is there. See, NBFCs lost their mojo after IL&FS crisis.
Yeah.
With the exception of a Bajaj Finance, none of the NBFCs have done well. They really lost their mojo. Look at their price, their books had to be contracted, they had to be bought down because of risk measures. The Reserve Bank of India was also actively managing the risk there. So that heyday has not come back. And I don't think that heyday will come back because banks are now lending. See, why NBFC is doing well, banks are not lending. So banks are lending now. So it's not going to go back to the halo days, but yeah, there's a tactical move in the short term in some of the NBFCs.
Yeah. Well, NBFCs aside, I think the stock today is going to be Indigo, especially after that mega order that they've bagged from the A320 aircraft worth about almost $50 billion. Now, that, of course, is the conjecture value of this mega deal. But yeah, the solar ruler in the Indian skies, and it's expanding its fleet and rather aggressively.
Yeah, I mean, when I looked at the deal, I said, wow. But then I looked at the fine printed, I said, impressive. Then I read more and I realized logical. Now, the headline is great. Yeah. But just think about it. What are they talking about? They're looking at doubling their fleet capacity by the end of the decade. That translates into a 15 to 20% growth. So airline business is a business in which you have to preempt the demand. Airline is not like baking a cake that happens in 3 hours. Airlines have to plan the delivery and it takes years before the fleet actually is delivered. The global airline sector is still dominated by Boeing and Airbus, and there is a tight demand, there is a tight supply there. So you have to plan for next 5 years. So what is Indigo saying? That look, we see visibility for next 5 years and we are going to be going international. Up until now, the growth in Indigo has been a function of domestic market. Now they're going international, which means they would need additional aircraft. Some aircrafts again would be there for the lease back, and then fleet renovation also will happen. And then they are also growing. So growth of 15 to 20% is something what they see for next couple of years. They are expanding capacity and they're also endorsing the fact that we are confident about what is happening in the aviation market. So yes, in theory, if you think about it, 15% growth for Indigo, 15 to 20% growth for Indigo on such a large base, which means technically Indigo is indicating that in the next 3 to 3.5 years, they actually would double in terms of where the need is going. And I think it's evident. I mean, look at airports, look at demand, look at travel, look at holiday, look at business travel, and look at connectivity. Yeah. Now the trick is, can they manage the entire timeline. See, the airline business is also a function of timely delivery, managing cost, managing synergies, getting scale right. So that I think is important. And I hope that when so many aircrafts are coming in, Air India also is operating.
Yeah,
I mean, we have a proper infrastructure. Bombay still has one runway. Delhi, you have to struggle. Half the time the bays are not there. So I really hope that while the aircrafts
is
are
there,
coming,
hopefully the
I hope
airport
there is
infrastructure is
also better.
backing
Which
it,
hopefully
absolutely.
it should.
Look at Bombay. I mean, from years and years, we've been talking about the second airport. And every chief minister has come, or every Maharashtra chief minister has come and unhone तारीख पे तारीख कर दिया. So just think about it. I mean, the reality is that the financial capital of Bombay has one runway.
Yeah.
No, which is
Fingers
fair,
crossed
but
this time.
nonetheless, at least there's a lot lined up in terms of infrastructure. Every budget we hear those 200 airports coming up, etc. Let's see. The proof of the pudding, of course, is in the execution, and that is what we'll watch out for. But we spoke exclusively with the CEO of Indigo on our birthday on June 16th, and they talked about and hinted at least their expansion plans, the kind of growth that they're envisaging in the Indian skies. Listen in.
Basically starting from one flight a day to today over 1,800 daily flights, and last year we welcomed on board a total of 86 million customers. I think where Indigo has been standing out is a very consistent customer promise, and we deliver upon that customer promise every day. Courteous and hassle-free service, affordable fares and on-time performance. And with the expansion of our network and our portfolio, really also adding there an unparalleled network. And that combination in itself has helped Indigo in this, what is indeed a brutal industry when it comes to the aviation industry. Today, I would say, or more recently, coinciding and going hand in hand with the economic growth of India and the further economic potential, we're very upbeat on the outlook for the Indian market.
Well, that's Interglobe Aviation. That's going to be the stock to look out for. Of course, we'll be playing out sound bites of most of our experts who, as recent as Friday, were recommending that Interglobe Aviation is one amongst their top picks, Vijay Kedia to be precise. But we'll get to that soundbite in just a second. There's also PM Modi's historic US visit, which actually kickstarts, and he's going to be arriving in New York today. He's going to be meeting with business personalities and dignitaries in the United States. And then, of course, come tomorrow, he's going to be also participating in the Yoga Day event at the United Nations headquarters as well. But yes, interesting to hear out. I mean, this is obviously not his first visit. He's always been revered on the US land. So yeah, what comes about when it comes to maybe tech, defense, those are the headlines that we're going to be looking out for.
Tech, defense, aviation. See, I think it's evident which way the partnerships in the world are moving and what kind of formidable partnership United States and India they are enjoying. They both are now active trading partners. US is India's biggest trading partner yet. The narrative in the world has changed, and narrative post the war, I think, has been very, very favorable in terms of India's foreign policy. So it would be an interesting time. Why? Because India, in a sense, has really managed to have an edge in terms of the external policies when it comes to what happened to the war, the stance of India, the stance in terms of we will buy oil from Russia. And now I think it's a completely different way in which I think this partnership should move. One is in the area of defense. Second, I think it would be in the area of manufacturing. That's where I think large changes would actually move. China, one technical changes are happening in the entire supply chain. US needs a solid manufacturing partner. The evidence of that is, I think it is evident the way how Apple has come to India and how other big companies are setting up their base in India. India is where the demand is. US is where the technology is. And I think that kind of a bridge, if it gets created, it's good for everybody and it's good for at least India.
Oh, well, yes. So definitely a lot of headlines is what we are watching out from this visit. And let's see what really comes out for defense, aviation, as well as technology. But just globally speaking, of course, the US markets were shut overnight, so we don't have many cues. But the Asian markets today have opened on the back foot. There's a 1% cut coming in for Hang Seng as well as Nikkei. And of course, this morning, the big announcement came in from China, wherein they have cut their one-year prime lending rate by 10 basis points, pretty much factored in. The street was expecting that, but nonetheless, those are the global cues for you this Tuesday morning. But what is the global commentary like? Let's go across to Vinny to find out just that.
Good morning, and what we're watching out for is the Bank of England's rate, and we have most of the commentary that has actually come in on that front. So firstly, I'm going to start with the commentary that has come in from Mohammad A. Arian, and now what he's saying is that this one, in terms of the rate hike, is going to be a tricky one for the Bank of England. Why? Yes, there's no doubt that they're going to be taking a rate hike, but what is the size of the rate hike? That's an important one to watch out for, and also in terms of the policy that they're giving for the way forward, both standalone as well as on the consolidated basis and a combination basis, how that is going to be working out. Important is going to be that commentary coming in there as well, because for when you look at it in terms of policy changes, there are a bit of a challenges for Bank of England in terms of the policy side compared to the other central banks and top central banks. So that is an important one that everyone's keeping an eye out on. Other than that, we have Holger also, who said in terms of the Bank of England, what they're saying is that a UK 2-year yield has seen a jump of as much as 5%. So there's a hike of as much as 5% that is coming in. Now, what they're highlighting is the interest rate this week in terms of Bank of England. That's a key one to watch out for as well. And obviously, yes, they expect an increase coming in this time as well. And moving on in terms of ECB's commentary, we have some commentary coming in from ECB members, where ECB's Lane is saying that actually inflation has come down fairly quickly in the next years, and a lot of hikes are already done, and the data is going to be driven at this point by the ECB cycle. Other than that, ECB's Sonaras has also said that they see a possible end of rate hike in 2023, and they believe the inflation fight should trigger the recession as well. And lastly, we have commentary coming in from Blinken, where he met Xi Jinping. He's saying that the trip has achieved the goal because the two sides had restored the senior level communications.
Okay, we leave it at that, Vinny. That's some of the global opinion coming in this morning. By the way, the SGX Nifty is once again indicating a quiet start. Let me welcome on board Naresh Mirani, CA Rudramurthy, to talk about where they see the market headed. Naresh, hi, morning. A bit of a disappointment yesterday. Do you think we're in for more?
We stuck in this range basically where we 18,600, 500 on the downside, 18,800, 900 on the upside. That remains a problem zone. And none of the heavyweights are actually taking up any momentum. We are seeing a slow drift or a sideways action in most of the heavyweights. So we wait for 18,600 zones to actually look for a long on the Nifty. In the interim, it's a hold wherein you wait for an opportunity on the downside. Overall, if we cross 18,900, that is the point of time where we get into momentum. And that could happen only when one of the heavyweights actually break out. So the problem right now is 40 to 60% of the index weights do not have great momentum. But when we look at the broader markets, every other index, whether it is the small cap, mid cap, micro cap, BSE all cap or Nifty 500, all of them have hit new all-time highs. So it's the heavyweights which are not doing well. So for now, continue to focus on the broader markets till the time we don't cross 18,900 or come closer to 18,600.
Rudramurthy, what is your sense? A new high today? We missed that mark by what, 9 points, 10 points?
Nikunj, it is tough actually having made closer to that all-time highs. I feel there is an exhaustion clearly visible, at least in Bank Nifty, if not in Nifty. So for me, last 1 week, if I see the data, Bank Nifty is struggling to cross that 44,500 mark on futures. So for me, Bank Nifty is clearly showing that weakness, and Nifty, yes, because of Reliance, it was holding up. And I feel even it is a matter of time, Nifty should also start consolidating. At least time-wise, it has to make some correction on the downside. And this is my very short-term view. Yes, the medium to longer time frame trend is very much intact. And as Naresh told, on Nifty, 18,600 to 18,900 is the range now where market is consolidating. So if I want to buy as a momentum trader, I would rather buy once we cross decisively 18,900, or to short as a momentum trader, I will wait for 18,600 to break on Nifty future. However, in this range, if you want to trade, I will be a seller at higher part of the range, that is at 18,900, and I'll be a buyer at 18,600. Be more stock specific. And levels on Bank Nifty future, if I have to see, 43 43,950 is now acting as a very, very strong resistance on futures. So for me, every rise to 43,950 will be sold into, and I won't be surprised to see levels closer to 43,000, 43,100 to come on Bank Nifty future, and Nifty future should come closer to 18,600, where we can take a buy call based on how market reacts at that point of time.
Right. Let's get stock specific. Nuresh, tell us what are your top recommendations?
So first is a buy on Bank of Baroda that gave a breakout yesterday. Good price momentum out here. Looking at a target price of 205 in the short term, a stop loss to be kept at 187. Second is a buy on BHEL. This is the only stock which has not done well in the whole capital goods space relatively. The stock is now making a cup and handle breakout above that 87 mark. The close has been above that 87 mark. And interestingly, if you look at it, the stock has this tendency to be volatile. So the last time the stock had gone to 90, it corrected to 65. Again, it went back to 87 levels and corrected to 78 levels. And now we are trying to make a new 52-week high going forward. So it looks like a structural breakout here. And 90 was the price where the stock was back in 2018. So it could be a longer term breakout as well here. So stop loss at 84 and an initial target price of 100.
Rudra, quickly, what are your top stock recommendations?
See, for me, private banks are showing that patterns of exhaustion. Definitely no shorting of either SBI or Bank of Baroda, which is very strong. But for me, it is a choice between ICICI, Axis and Indus India Bank. I'm picking up Indus India Bank for a target of 1,250. One can sell in futures, keeping a tight stop loss of 1,330. And even AU Bank has run up too much. And for me, again, that is showing clear distribution patterns at the resistance level. So for me, keeping a tight stop loss of 775, I will sell AU Bank for a target of 751.
Okay, so those are the top technical recommendations coming in this morning. Bear of a sell call coming in on some of the banking names from Rudra. But what is the top sectoral bet that the big market veterans have? Listen in to the opinion coming in from none other than Manish Shokhani as well as Vallabh Bansale.
India is the worst affected country in an energy crisis historically. And now when energy prices, well, it's not imminent, it won't be in 2-3 years, but say you're talking 2030, imagine what it does to your balance of payments, because that 6% import bill hopefully vanishes if you're creating your solar and hydrogen locally. And maybe, like I said, from an importer, you become a net exporter of energy. Because solar, literally 1 hour is equal to all of mankind's needs. And the problem was on storage technologies. And even in storage, if you start cracking this hydrogen thing, and today the cost curve is very high, but the stated goal of all the Reliances and others is to get it down to that $1 price point. It has transformational impact. So industry after industry, which you think is highly energy intensive and we can't participate over there. Just for example, and I'm not making the case, but let's say aluminum is considered to be highly energy intensive. Aluminum is the metal of the future because you want to make aircraft or lighter cars, a lot of your consumer products and so on with that. It changes the dynamic of the industry. You always had the bauxite over here. You always had the limestone over here. Now you have the cheap energy. Do you become the hub for the world? So industries will just transform, and therefore this confluence of technologies which are coming and hitting, it's just so fascinating to see how these can transform. And all you want is to be with the smart person who's running those businesses, because they know how to surf the waves. Elsewhere in the world, if you went and you said there's Wells Fargo and JP Morgan, but they are ossified and the fintechs are coming and disrupting them, the good news is in India, we onboard them. So the fintechs have been taken inside the banks over here. Same way, new energy has been taken inside the old energy company. And they are the ones leading the charge. So they're not getting disrupted in a way. They're sort of morphing and riding the wave. In a very different way, to give you the example, if you think of the old Kumar Mangalam Indian rayon business and how they transitioned from there to the new age businesses of fashion, the financial services, and so on. It's that sort of transition happening across these business houses and across the country.
Artificial intelligence has been at work in technology companies for a while. It has now just hit the public imagination. And therefore, every shift change in technology, it's an opportunity for those who are integrators, who have to integrate the old with the new. And every time the shift changes happen, there are people who lag behind, like in the skills, just as you see in the labor market, that those who cannot upskill, they fall behind. So also in technology companies who are not poised to upskill quickly, they will probably lag behind. But those who can upskill, they will benefit from new technology. New technology always creates unimagined new applications. And new applications will mean the necessity for new integration of old and new, creation of new and business advantages and all. So we have seen this cycle play out. When we took Infosys public, that time it was still the mainframe world. The IPO talked about mainframe, and even while the IPO happened, soon the world moved to PC. There's a big shift. But the big shift has only meant that the company did well, that we had White Day and we had the internet boom and Web 2 and Web 3 and so many technologies have come. So I think from a long-term point of view, well, yes, this is an aberration. The slowness in the market in the US, that was a major driver for the company rather than ChatGPT or artificial intelligence. So I think artificial intelligence, big companies will be fine.
We are really excited about our growth in India because not just for us, we believe this is the golden age of travel. And this is not India's decade, but it's India's century.
Well, it's the largest ever order in the history of Airbus. Interglobe Aviation has placed a record-breaking order with the manufacturer Airbus at the Paris Air Show. In fact, the airline ordered 500 Airbus A320 family aircraft, making it the biggest order in history. Remember, last week Indigo top boss spoke with us on speculations about this mega order. Well, let me now take it across to Somit. He tracks the sector very closely and try and understand what this deal means for Interglobe Aviation and, of course, the Indian aviation industry. Somit?
Well, the 500 crore aircraft order that Indigo has given with Airbus is the single largest aircraft purchase that we have seen so far in the aviation history. Now, the deliveries of this aircraft are expected to come in by the end of this decade, that is 2030 till 2025. Now, the exact mix of A320 and A321 and the engine selection are yet to be done. Usually, A320 is used for short haul routes, while A321 is used for long haul routes. Now the potential price for this order at list or the MRP, as I would easily put out, would be around 50 billion US dollars, but there would be a lot of discounts coming in given the large deal size. The actual price for Indigo could be around 25 billion US dollars. Now post this big order of 500 aircraft, the outstanding aircraft order for Indigo now stands at close to 977. This is followed by Air India at around 470. They had recently given this order to Boeing and Airbus both. Then there is SpiceJet at 129. Go First, which we still do not know whether they would take this order or not, but the order stands at around 89. Then there is Akasa Air at 52 and Vistara at 13. Now, why this such large order given by Indigo? Now, in the past 20 years, we have continuously seen that the aircraft supplies have been, there have been delays in aircraft supplies, and hence to secure orders or to secure aircraft post 2030, they have given this large order. Now they aim to increase the international market share over the next 2 years. They're expecting to increase the international capacity to around 30% from 23% currently, and they're also saying that the Indian domestic market would grow at around 15% growth. Thus to suffice the domestic growth and their international expansion plan, the company has given such large order. Now, Indigo Airlines is the 7th largest airline globally given by the departure terms, and their dominance in the Indian aviation industry has been continuously rising. By the end of May, their market share had increased to around 61%. This increase in market share was also because of the Go First shutdown that we had seen in the month of May.
Okay, so that was the entire news flow around Indigo and the 500 aircraft order that they have placed. But Vijay Keria is also quite positive on Indigo. In fact, he has been a long-term holder of the stock. But what's his take on how the outlook is going to pan out? Listen in.
I like airline stock, and I have invested in that. I've invested in Indigo. That is again a disclosure and disclaimer. Of course, I'm not a consultant, so I don't recommend shares. This is what I have done just for the benefit of your viewers. I've invested in Indigo, being the largest company and the most profitable company in airline sector. And I am bullish in airlines. I think what had never happened in maybe 20, 30 or 50 years in airlines industry should happen in next 5 years. This is, as on today, when I'm talking to you, I have this opinion. Airlines is a sunrise industry. In spite of all those bad things and about bad cash flow and whatever negative, opinion of others.
Okay, let's move on and let's talk to the management of Ashok Leyland and try and understand what this new partnership with AI drivers is all about. We have with us N. Saravanan, the President and Chief Technology Officer at Ashok Leyland, joining in on the show right now. Mr. Saravanan, great to have you on the show. Help us understand this tie-up with Air Drivers for developing this autonomous electric port terminal trucks. Tell us a little bit more about what kind of collaboration will be there and how do you see port terminal truck electrification transition happening in the country?
Yeah, so if you look at electrification of trucks, we believe that certain segments, even in trucks, get electrified first. We believe one of the segments that is prime for electrification in heavy-duty trucks is the port terminal tractors. And these tractors are the ones that actually move the containers from the ship to the stockyard. Yeah, they have limited sort of a range of application, but inside all the major ports, you see the terminal tractors. Currently, these tractors primarily are diesel driven, and it's getting electrified quite rapidly the worldwide. So we believe the market for this product is not just in India, but also worldwide in multiple ports across the world. What's also happening is it is an environment, the port environment, where there's a lot of equipment going on. There are cranes working, there are loaders working, there are these terminal tractors working. So safety also becomes quite paramount. That is where we believe it's a combination of electrification plus safety is driving the need for these vehicles to be moving around. You can think of it like in a lot of the factories now, we have this guided autonomous vehicles. Similarly, we believe the autonomous vehicles in commercial vehicles, at least the first set of autonomous vehicles will happen in closed environments. And we believe the port application is one such environment. And that's why we're working with AI drivers to develop autonomous electric terminal track.
Sure, but how's the company looking at expanding the footprint in the overall EV space, as we always hear about Switch Mobility buses as well, which has been in the business for a while. But what are the other plans to expand your presence in this electric transition?
No, I think I'm not sure how we say competition is ahead. But anyway, we have on the bus front, we have Switch Mobility, which is a subsidiary for buses. We have been competing aggressively in various tenders. We also have bus operating. What you'll see in the next few months is the LCV products coming out, ELCVs. We also have what we believe an advantage over the competition in the heavy trucks and medium trucks. We have a modular platform, and you'll start seeing products from the EV trucks from the modular platform. So we believe we are fairly, equipped and probably to highlight products to the market. With the bus coming out from the Switch portfolio, ELCVs coming out in the next 6 months, and then you start seeing the various other medium heavy-duty trucks coming out in the next 6 to 12 months. At least what I see initially is not mass market orders for the large trucks. You will start seeing a lot of small volume, 20, 30 vehicles, and I'm sure we will be quite competitive and we'll have the right, products in the market by that time.
Well, really appreciate your time, sir, and thank you very much, and good luck with this new product launch. Anand Tandon is ready. Let's connect with him and let's understand what he makes of the current market action. And Anand, it's one of those summer rallies which is absolutely breathtaking. What is the right way of risk management in this rally after a 15% one-way move?
Well, as you said, it's been quite breathtaking, and the market is looking a bit stretched given the kind of momentum that we've seen behind it. Clearly, the only way you can kind of hedge yourself is to look for those sectors which haven't moved and where there is a possibility that over the next 1 year or 2 years you could see an upside, and move out of those which have gone up tremendously. We've already seen the most favorite sector, the banking and finance sector, actually give up some of its gains. Here again, the ones that are slightly out of fashion, for example, HDFC, are something which merits a relook, given the fact that because of the technical action, it has eased off. Whereas you could be actually looking at it beyond the technicals, and the valuation now in HDFC Bank, for example, is probably one of the lowest that you would have seen over the last decade or so. So similarly, you have to now look for spots, assuming that liquidity continues to be reasonably buoyant. You would get opportunities in companies in sectors like, for example, IT, which again has fallen off a cliff and is likely to remain subdued, but unlikely to fall anymore. So I think slightly out of favor sectors is the only sector rotation is probably the only way that you can hedge yourself a bit at this stage.
Right, Anand, stay with us. Lots more to talk about. A lot of stocks as well to discuss in just a short while. But here's a multi-bagger stock idea. And in fact, one of the stocks which has been a buzz off late, especially yesterday too. Restaurant Brands Asia, or RBA, has a futuristic business, according to Parinju Veliath. Hear out why he likes the stock.
I think one stock which I would like to say, which is not in the limelight today, is RBA. The Restaurant Brands of Asia, the Burger King company. So this is a beautiful business. It's in the infancy in this country. Last few years, they have been struggling with many things. And now this company owns the business of Burger King and Popeye in Indonesia also, the same listed company in India. So I feel they are well set for growing much faster and, creating cash flows in the future. And this business is futuristic, and I think this is Burger King is the second largest brand globally in that segment. So in India also is a huge, 17-18% of the people, the world population lives in India, and I think it's a great opportunity for conservative value investors at 107.8. There is no hurry to buy the stock. So we are holding it in our portfolio management, and the AF we are still buying for the new clients. It looks like a sober, safe idea, and it's like a new gen business, and you can participate in that. I feel this is RBA is a stock to watch, but there is no hurry. Again, I'm telling you, nothing is going to change dramatically. Here there is one technical issue. Everstone is the ultimate holding company, Everstone Capital. So I think the whole market, knowledgeable people about this company and its business model, they all are waiting for that event to happen. When will Everstone sell the stock?
Okay, so that's a stock on Parinju's radar, Restaurant Brands Asia. But what are the stocks on our editor's radar? Bank of Baroda as well as HDFC AMC. Let's start with Bank of Baroda. Nikunj, yesterday that stock managed to hit that 1 lakh crore market cap figure, second public sector bank to do so. What do you think about the outlook there?
When it comes to the PSU banking space, lion amount of market share is always occupied by SBI, big, large subsidiaries. But the quiet mover there is actually BOB. 1 lakh crore is a very meaty, meaningful market cap. And at a time when SBI is not participating, it is not that BOB has not participated. Look at the 3-month change in BOB and look at this year. 4% may not look like a large number, but you got to compare that with an HDFC bank or compare that with an SBI. I think Bank of Baroda is in rank outperformer. So why is Bank of Baroda doing well? I put a JP Morgan report, and I'm going to pick some points from there. Market share is improving. Retail loan growth book is faster than the private banks. Now, Bank of Baroda is a good franchise value. Their CASA is well under control. True. So they always get liabilities. But are they able to, in a sense, disperse loan in the retail space where they are weak, and are they growing higher than the industry average? The answer to both of that is yes. And they are also trying to do something in terms of technology where the other PSU banks have not really migrated that successfully. So blend of brand, decent valuations, outperformance, money is moving out of State Bank of India, BOB is benefiting, And all that put together, I will not be surprised that the outperformance, I'm not talking about a one-way move, the one-way move, but the relative outperformance, if you have to choose, let's say, between a SBI and a BOB in the near term, 3 to 6 months, I guess BOB is a better candidate to outperform.
Okay, so BOB is placed better than other public sector banking names. But Nikunj, let's just focus and talk about HDFC AMC, because the AMC sector as a whole has gone through a lot of headwinds, a lot of regulatory challenges. And now, of course, there's this supply overhang also coming in with Aberdeen selling last of its stake. But from here on, now the supply pressure is over. Hopefully, regulatory changes have stabilized. What's the take here?
You know, for a sector where everything just looked good, now everything is looking bad.
Yeah.
You know, the stock went to 4,000 plus 2 years ago, and the valuations were strikingly different from what they're commanding. Of course, the regulation has changed, the TR and what SEBI is trying to do. But what you got to understand is that at some point in time, the scale benefits would kick in. As the size is growing, the scale benefits would kick in. Profitability is not going to be as strong as what everybody anticipated 2 years ago because of SEBI regulation. But I think a lot of bad news is now in the price. Remember, this is one business which does not need capital to grow. And if you get operating leverage on your side, even though SEBI changes are going to be having impact on FY24 and FY25 earnings, which have not been announced yet, but speculating. Yeah. So if those changes are not what markets are anticipating, I guess that's a relief. And even if changes are announced, markets know they are coming. But in terms of specificity, a specific thing here, I think Aberdeen overhang is a big overhang for the stock, because you know that there's a sumo big ownership which is coming to the market on a regular basis. Someone's going to buy at a discount, which means that a long-term investor has moved out and a lot of long-term investors have moved in. Once that supply overhang in the near term gets sorted, the technicalities in the short term, they will always change.
Yeah, the technical adjustment will definitely happen. So today you might see a bit of a downtick on the stock on a technical adjustment of that block deal. But the medium-term prospect is something that we're talking about, and that looks fairly positive. So over to you, Aisha. That was about HDFC AMC as well as Bank of Baroda.
Oh yeah, those two stocks in focus. But how can we not talk about Interglobe Aviation? Anand, wanted to get your thoughts in here. The fact that they've ordered that 500 Airbus A320 family aircraft, which is going to deliver, of course, between, post 2030. But just the visibility that they have on the business, and, they're getting up for the demand boom already. Wanted to understand whether this 15-20% growth that they're penciling in, you think, is in the price, or is it good times ahead for the stock price too?
Well, for the current moment, there is a shortage of aircrafts in the market. So obviously, prices will remain firm in terms of the realization. And that is good news for anybody who's actually flying at this stage, because by and large, competition tends to dent the profitability and make that business unviable. The other thing is that the more orders you place, the bigger the profit you will show, because of the way that the accounting quirks work in airlines, where you book the purchase at the full price, whereas you actually get a discount, and the discount comes in through the P&L. So that's a very strange accounting principle, but that is the way that all the airlines do it. So therefore, so long as you keep on buying the aircrafts, you will continue to show a fairly strong bottom line growth, or at least you will get a contribution to the bottom line growth. So you are actually making sure that, over the next decade or so, there will be some contribution to the bottom line coming from this purchase kind of deal. Net for now, it's a cyclical market. There is no question that there will be a time not too far in the future where once the planes start flying again, many of which are grounded right now because of the capacity constraints, you will get the cyclicality coming in. But for the next few months, at least maybe half a year to a year, I don't see any negative in the industry at this stage.
I'm going to shift gears and again go back to a very simple data point on valuations. The small cap index, the mid cap index, and the Nifty. Now markets have to follow a trend where markets will have to become fat and obese in terms of valuations. They have to reach Humpty Dumpty level, then only they will correct. But right now, markets are nowhere close to what could be called as a Humpty Dumpty level. Two ways to looking at it. Previous peaks, at what P multiples they were made, and currently, are you below the 5-year average? That's a very basic, simple data to look at in terms of where the valuation stack is. Now for the mid cap index, for the small cap index, and for the Nifty 50. Based on all basic parameters, markets are not anywhere close to their peak, and they are still about 15% below their 5-year average. 5-year average includes a COVID drop also, and it includes a COVID sugar rush also. So that's my limited point, that valuations महंगे नहीं हैं.
But you know, the only thing is with this kind of sectoral churn and how squeezed and short cycles are getting, what is it that you bet on to catch in on that valuation headroom?
So you got to understand what the big trends are. One big trend is inflation has peaked out. So NBFC, banks, that will do well. Second big trend is manufacturing, I think, is real. Manish Chokhani explained brilliantly the Apple movement of India. That becomes a sunrise industry. Second, banks are going to do well because credit offtake, I think, is very strong. And then I think one theme which more and more will get pronounced, and this typically it happens before the budget, government will spend more. Infrastructure, cement, that I think will become strong. I think where the puck should move, Aisha, according to me now, are watch out for medium construction companies. Why? Because just think about it. How many, post the last crisis, how many real construction companies are left in India? Yeah. Post L&T, you just think about it. I mean, you have to really think hard and you would say, okay, which is the next one, guys? That's not the case in IT. Yeah. There's Infosys, there's a TCS, there's Wipro, there's a Coforge, there's a long list, right? So I think that is one space where you may actually see activity. Now, what may change the market, Aisha, and we've not spoken about it, is that where are the rains? Just where are the rains? Either IMD is in a denial mode, or we are in for a very late, seasonal rain this time. But the rain pattern is just not in sync with what the reality is. We are, I think, still in a denial mode. I mean, it's 20th, yeah, today is 20th. And it just rained for like half an hour in Bombay. This time Bombay is supposed to be flooded.
That was only because of the cyclone.
Exactly.
Nothing else.
Exactly. Yeah. And Google Map just is showing in the morning, at least Google Map is showing this clear skies for next 4-5 days. So I think markets are getting blinded with liquidity. They need to be careful about the rain. And that is where I think Anand Tandon, we need to be slightly more careful. What do you think? Anand?
So obviously, rates will be a factor, but increasingly you will find that rural India is not only dependent on agriculture. So, whenever there is a case made when monsoons fail, we say that more than half the income that the rural India gets is not from agriculture. But overall, as you pointed out, the macro theme at this stage is not so much the monsoon. There's nothing much you can do about it, but the kind of spend that the government will do and the kind of transfer of money that the government is likely to do, given the fact that we are in an election year. And I'm still betting on the fact that, you will get significant transfers in case there is a serious problem in terms of the rural consumption or the rural income because of El Nino or monsoon failure and so on. It's still early days yet. I think there is a possibility that you will still get a reasonable amount of rainfall, so the shortage may not be that much. But overall, I think what has happened is that because of the fact that some of the commodity prices have eased off and inflation has come down, it gives the government a little more headroom to be able to go out and spend a little more and transfer more money to rural India. So I would imagine that for this year at least, I would not be too worried. In fact, that would be one of my major themes, that I would look for the second half, rural India driving some of the demand growth, assuming that the monsoon is not a total disaster. You can also be looking at countries outside, markets outside India. Today, if China is trying to pump prime its economy, though it has become less of a stock market because of the intervention of the government, there is a possibility that there is a play there, and that's one of the things I would expect many international players to do. That finally take a bet on the fact that China will actually revive, given that the central bank there has also put its weight behind trying to pump prime the economy.
Okay, so that's one theme that you're watching out for, a rural recovery, but let's see whether the weather gods play spoilsport or not. We're talking about today and the stocks which are going to be in focus. A lot of deals and blocks on the anvil. Of course, the one for HDFC AMC just took place on the BSE. But Chara, tell us the details of HDFC AMC, Timken and a couple of others.
Well, surely Timken India would be actually in focus today, and there is expected to be a block deal happening here, and the promoters, Timken Singapore, selling roughly 8.4% stake in the company. Now, this is roughly 63 lakh shares, which is valued at almost 1900 crore rupees. Now, the selling price is expected to come in at 3
8,000 rupees per share, which indicates a discount of 14% as to the current market prices. And the important thing is promoters will be actually having a 68% stake in the company in the month of March as well for the shareholding pattern which was there, and now this will be the first time the promoters will be actually selling stake in the company. Now, of course, the second stock which would be in focus would be Aether Industries, where the QIP issue has opened up. And do remember that the floor price is set at 985 rupees per share. Now that indicates roughly a discount of 1.4% to the current market prices, and the board's approval has already been there to raise roughly 750 crore rupees.
Okay, thank you, Sharat, for joining us with that quick take on a couple of counters that we need to watch out for. Aether Industries as well as Timken and HDFC EMC block has just happened. And if we still have you with us, I wanted your take regarding HDFC Twins if you haven't discussed that, because those stocks have been underperforming. And then on the other hand, you have the PSU names emerging in the sense of Bank of Baroda, etc. Would you also look at expanding your vision beyond SBI into PSUs?
Well, Bank of Baroda is certainly a good quality, large enough bank that you might want to look at, given the fact that they have transitioned somewhat into the private space over the last few years, in the sense that the management came from the private sector, an experiment which continued for a while, and now while we have the new management, the current chairperson is from MD is from SBI, but he has continued many of the practices that were instituted and built on them. So therefore, the Bank of Baroda numbers are fairly attractive, and therefore, to some extent, it qualifies as a company that you might want to look at. Beyond that, I would still argue that many of the traditional public sector banks really have no idea what business they are in. So therefore, I would stay away from it. HDFC, in fact, as I just pointed out a while back, is a good opportunity, because while technically, because of the lowering of the weightage and so on, there may be some selling for index followers. It is now trading at a valuation which is far cheaper. It will be one of the biggest banks, and it continues to deliver like a machine consistently quarter after quarter. A little bit here and there variations you would expect for that size, but despite that, the performance has been fairly superlative. So I don't think there is much to complain about. I think it will continue to gain market share once the technical factors are out of the way. Certainly a stock that I would be looking at closely.
Naresh, one stock which is running into resistance now and then is Angel One. Now, this was like the haloed stock, complete play on digital, brokerage industry was growing, demat additions were strong. Has the stock turned? Do you think the best of the gains in Angel One, are they behind us?
So that would be, say, a statement which I would not go with. The stock has moved up well. It's been a very slow and steady move. So the problem is the stock at 1600 levels has a lot of resistance. Back in 2022, it made 3 tops around that area. The initial top in 2021 was also around 1600. Same is the case on the higher side. 1950 is the all-time highs. And in the near term, just say in March, the stock was at almost closer to 1000, 1050 levels. So the stock has seen a 50% move. So a pause would be normal. But does it imply that the stock will go sideways? It looks difficult, because this is the only stock in the whole broking space which is trending really well. Most of the other names are drifting lower. So in this case, one should be actually looking out for a dip closer to 1400, 1450 for an entry point. So the structure is positive. The trend has been positive, relative strength in the whole segment. So expecting a dip here, but not a major period of long-term correction.
What is your view on the entire brokerage space and the AMC space, Anand? I mean, the brokerage space, there is disruption there because of platforms like Zerodha, and AMCs, well, things are looking tough for the AMC space given what the SEBI norms are in terms of commission structures now.
Well, obviously, brokerage remains an industry which is largely going to be cyclical. It has not been so far for the last few years, only because of the consistent growth that we have seen in the kind of retail participation, and that's been great for the markets and for the brokerage industry. But there is no great move towards being able to raise commissions or make money. And the action that we saw today against IIFL, for example, tells you that finally SEBI is serious about separation of capital use between the broker's own funds and the client funds. So I think the margins that you would be making would actually further shrink. Yes, you will have a few winners which will remain on the top of the technology curves, and otherwise many of the others will move out. The AMC space, to my mind, is now become it always was an asset gathering space more than a performance space, and now it will become even more so because as commission edges go away, the smaller players will have a tough time trying to get in. However, the market itself is growing, and we have seen a fairly strong growth in terms of the number of new players that have come in terms of AIFs and so on. So by itself, it will continue to be a growth space. But I always wonder why people look at only the Indian AMCs. You look at a company like BlackRock, it will be trading at a fraction in terms of, for example, the percentage, the price against the AUM that they have, and they'll be growing bigger than the Indian market overall every year by themselves. So it's not that there is a lack of growth, but the valuation that Indian AMCs trade at, given that you can exit almost any time, is to my mind something which I find difficult to justify.
Okay, so that's the take coming in on HDFC AMC, how the brokerage industry is evolving in India. But Naresh, wanted your take regarding a couple of these breakout counters. Yesterday, Jindal Steel saw quite a bit of momentum. M&M Financial was also in focus. And today, of course, Coforge will be in focus on account of the analyst meet takeaways, wherein they are looking at doubling the revenue in 3 to 5 years.
So Jindal Steel is interesting in the sense that the stock has been holding onto that 500, 520 support. It went below it for a few sessions, but did not see a follow-up correction. Now, if you look at the stock, it topped out around closer to 570 in the whole rally in 2022. From that point of time, this is the only stock in the steel segment which is back to the same prices. Now, the problem zone for the stock is around that 600 mark, which is where it has 4 to 5 tops over the last 6 months. So eventually, if it breaks above 600, that would be an indication that the stock can break out in a meaningful way. So for now, yesterday's move could be a one-day tick, but if it's in 600, that would be a huge breakout. Coforge is interesting. It's been a slow and steady recovery from the lows. The only difference being that a lot of these mid-cap names ended up making same lows of September of last year in March, April. Coforge made a higher bottom, so that was indication of relative strength. And companies in the IT pack which have made a higher bottom have done well. So Coforge could be interesting. Till the time it holds above 4,500, the trend remains positive here.
Okay, trend remains positive for Coforge as well, but trend remains positive for restaurant brands, aka Burger King as well. And Puranju has been talking about how he's positive about the company given the outlook.
I think one stock which I would like to say, which is not in the limelight today, is RBA, the Restaurant Brands of Asia, the Burger King company. So this is a beautiful business. It's in the infancy in this country. Last few years, they have been struggling with many things. And now this company owns the business of Burger King and Popeye in Indonesia also, the same listed company in India. So I feel they are well set for growing much faster and, creating cash flows in the future. And this business is futuristic, and I think this is Burger King is the second largest brand globally in that segment. So India also is a huge, 17-18% of the people, the world population lives in India, and I think it's a great opportunity for conservative value investors at 107.8. There is no hurry to buy the stock. So we are holding it in our portfolio management, and the AF we are still buying for the new clients. It looks like a sober, safe idea, and it's like a new gen business, and you can participate in that. I feel this is RBA is a stock to watch, but there is no hurry. Again, I'm telling you, nothing is going to change dramatically. Here, there is one technical issue. Everstone is the ultimate holding company, Everstone Capital. So I think the whole market, knowledgeable people about this company and its business model, they all are waiting for that event to happen. When will Everstone sell the stock?
Okay, so that's a fundamental idea coming your way, but it's time now to thank Anand for joining us this morning, but go across to our technical experts to get the best technical picks as well. Rudra, you go first. What's the top mid-cap idea?
See, for me, Dreamfolk looks a very, very strong chart, and any dip on Dreamfolk will be a good buying opportunity. This stock has made a pattern of rounding bottom and given a clear breakout above levels of 510. Now, having given that breakout above 510 with price and volume action, this stock having gone up to levels of 630 is now again giving another chance to re-enter. So at current levels or any dips to 570, I will be a buyer on Dreamfolk, looking at initial target of 650. Eventually, for medium to longer term, this is a 4-digit stock, can touch even 1000. Keep a stop loss of 550 and look at initial target of 650 on Dreamfolk.
So that's a bet coming in from Rudra. Dreamfolk is a stock that he likes. Naresh, what about you?
So that would be a buy on Tata Power. The stock has been slowly and steadily trending up over the last 2 weeks, and now has got into a much tighter range of 220 to 225. A small pennant or a flag pattern here. Once it crosses 225 levels, could be a quick momentum move. Stop loss to be kept at 218 and a target price of 240 in the short term.
Okay, so Tata Power is the stock that Naresh is recommending at this point of time. But what's happening across the globe? Let's get you the latest in our News Fatafat segment. Starting with EdTech giant Byju's that has slashed as many as 1,000 jobs over the past few days. The layoffs come at a time when the company is involved in a tussle with the lenders amid a challenging fundraising environment. Job cuts will have an impact on middle and senior level employees as the company continues to widen its cost-cutting measures. Meantime, as many as 96 heat-related deaths have been reported from Uttar Pradesh and Bihar. This as the north and eastern India continues to reel under sweltering temperatures. Union Health Minister Dr. Mansukh Mandavia will chair a high-level meeting to review the public health preparedness regarding heat wave across the country today. And it's time of the year when Odisha's Puri is all decked up for the grand Rath Yatra procession. Devotees from across the country pay a visit to the state and the temple. As many as 7,000 devotees are expected to assemble for the procession. A traffic advisory has been issued by the authorities to manage the large swarms of people and smoothen the vehicular movement. Shifting focus to the neighbouring nation Nepal now, where a large number of yoga enthusiasts along with Indian ambassador to Nepal, Mr. Naveen Srivastav, and Tourism Minister performed yoga at Lumbini, the birthplace of Gautam Buddha, ahead of the International Yoga Day tomorrow. Well, a strange occurrence in the North Atlantic now. A tourist submarine has gone missing. Search and rescue operations are underway. 5 people were on board the submarine, which went on an expedition to explore the Titanic wreckage.